Morning. You are in the P.I.L.L Method Club, and this is how to pay off mortgages in 7 years. Not just mortgages, but that's everything, because we focus on interest cost, not just interest rate. It's not the amount of money that you borrow that's the problem. It's the cost of the money that is the problem. And we are here to make sure that you can eliminate as much as that of that cost that's mathematically possible for you. It is individual, it is powerful, it is something that you deserve to know. Good morning, everyone. We're going to be talking today about buying a house in a recession. And listen, whatever the recession means to you, it should be a very, very good conversation. The recession should mean something to everyone. I would love it if we could get some people up on the stage today. Just raise your hand and we can start this conversation and talk about not only about this in general. Okay, invite to speak, Dr. Barbecue. All right. And not just talk about it in general, but maybe somebody is trying to buy a house out there and somehow the recession is keeping them from doing that, or they think that because the interest rates are higher, housing prices are higher. What can we do about it? Good morning, Dr. Barbecue. How you doing, sir?
Good morning.
All right.
Okay.
There's something going on with your microphone, Dr. Barbecue.
Bad spot.
Yeah, you might have to change phones.
Nah, I gotta change AT&T.
There you go. Yeah, something's going.
We can get in this area is AT&T, and boy, they slow roll everything.
All right. Yeah. So anyway, sir, what do you have something for us this morning?
I enjoy very much listening to you every time, and can't wait for you to get to Dallas. So excited about this.
Yeah, we'll be in Dallas in September. Okay. Yeah, we're coming to Dallas. Yeah, listen, you need to reach out.
Most definitely. Been working on the to fill out for the program, the financial analysis report.
Right. You've been working on that?
Yeah, I've been working on that. So I hope to have it in hand and everything by the time you get here. And just wanted to meet you first.
All right. Fantastic, man. Fantastic. So we've got Credit Goddess on the stage this morning. Credit Goddess, how are you doing?
I'm great. How are you, Don?
I'm doing well. I'm doing well this morning. Listen, we're going to be talking about the recession and what that means. Has that impacted you or your clients or your business, this so-called recession?
Not yet.
Not yet. Okay.
Not
All right. Well, that's good. That's good. So listen, but have you heard anybody talking about it and how it's impacted them? Because we want to get a conversation going about the recession this morning.
Yes.
Okay.
Yes, I heard it.
So what are some of the things that you've heard?
Well, I know some of the clients are still concerned about the housing, the pricing of the homes. And then I'm hearing the conversation on the realtor side where they say that the homes are, dropping just a little bit. So people are still buying homes and it's not affecting my business just yet. People are still trying to buy. But as far as like the talk of the recession, because I remember the last recession, 2008, people were losing homes. People were walking away from homes. So this recession is just going to be a little bit different. So I'm just waiting for, just to see what type of changes is going to be in this go round.
Well, listen, we know that prices are getting higher, folks. I mean, food prices are getting higher. My wife brought home a dozen eggs yesterday. I was afraid to ask her what she paid for them. No, I wasn't. I'm just kidding. But things are a lot more expensive now. Homes are more expensive. Loans are more expensive. How can we navigate this? Does anybody have any questions or comments about how they're navigating, or would you like to ask some questions about how can you do what you need to do to get through this recessionary period, and how the P.I.L.L method can help you to navigate any of that. So if you have any questions or comments, come on up to the stage and we'll talk about it this morning. So is anybody out there trying to buy a house? Are you trying to refinance? Are you looking at purchasing a car? Anything that's going on in your life that you're going to be doing in the very near future, and you want to know how you can best do whatever it is you need to do and use somebody else's money. How can we optimize the use of somebody else's money this morning? We're going to be putting, if we have some questions here, we're actually going to be putting some of our information on video. And if you want to see what we're doing, you want to go to ice10kvideo.com, ice10kvideo.com, and then click on our YouTube channel, click subscribe. And folks, it'd be good if you like, if this video that we're giving to you is good information, then you want to like it. All right. And then comment on it. So subscribe, like the video if we're giving you good information, good content, and we'll be able to help you understand what's going on. So we have some good people in the room right now. Let's go ahead and share the room and let's get the information out there. I see you, David. How are you doing, sir? I haven't seen you in a while. All right. So he's on the stage there in our room, and we got Joe and we got John in here. We got True in here. We got Dana and Daniel. Daniel, I kind of like that name. All right. And Queenie in here, and Jeffrey, and Daphne is in here. Angel, Jeffrey, you've been in here quite a few times. So listen, folks, I can't believe there's no questions about the recession and how that is affecting what we're doing here. All right. All right. David said he's already on YouTube. So David is in both places. All right. So listen, folks, anybody else got any questions or comments at all about the recession and how it is affecting what you're doing? Listen, I had a call the other day, credit goddess, about buying. They wanted to get a home, and they were concerned about the interest rates. All right, and that they had missed the boat on the lower interest rates, and I let them know that you didn't miss the boat if you can make the payments. You didn't miss the boat if you can make the payments. All right. So let's talk about how lending actually works in terms of getting your new house. So I'm going to be putting this on the screen here. Let me share the screen. All right. There we go. And we're going to put Brett Whistle in here. There we go. And we're going to talk about it. All right. So if you want to see this example, let's go to ice10kvideos.com. And we're talking about a $400,000 home. And the interest rate is at 6%. Now, here is the payment on that, $2,398.20. Now, for the size house that we're talking about here, they're still in their market, in this person's market. I don't want to give out too much information, but in this person's market, they're still well under what they would be paying for rent, even with taxes and insurance. So keep that in mind, folks. So don't react to the word. When you hear the word interest rate, when you hear the interest rate, don't react to the word. We always want to react to the math and not just the word. Okay, so when you're doing this, you want to make sure that you're going to get the best deal out of it. And let me tell you something about getting the best deal. It's not always what you think. So even Credit Goddess would tell you, and I'm going to tap. I want to ask her this question in just a second. I want her to get ready. Um, um, when it comes to getting the loan, everybody thinks they need to improve their credit score so they can get the lowest interest rate possible. So, Credit Goddess, can you talk to us about is that necessary to have that 800 credit score to get a decent rate to purchase that home?
Shit. After listening to you, it don't really matter. Because if we're talking about saving on interest costs overall, believe it or not, having a higher credit or having a higher interest rate, you can save a whole lot more than if you had a lower interest rate, if you have the money. So just hearing that, I recommend and I advise everyone to have a budget and then also tap into the pill method so that way you can understand how is that possible, because it is possible. But to answer your question, um, if you have a higher credit score, yes, you are given a better interest rate, better terms. You can actually negotiate terms because you have better credit, right? So when I educate my clients about improving their credit, it's just so that they can qualify. I think this go round, most of the mortgage brokers, they do want to see a higher credit score. Some are asking for a credit score of 700 in order to get certain type of loan products. But I want people to understand that there's so many different loan products that are out there, that you can tap into. The higher your credit score, the more loan products that you're given. When you have a lower credit score, a lot of people tend to only qualify for the FHA, which requires you to put the 3.5% down, which is, everyone's budget. They can afford to put the 3.5% down instead of 20%. But believe it or not, the 20% that a lot of people are hearing as far as like a conventional loan, no, you can actually get a conventional loan with 3.5% down. The only difference between the FHA and a conventional is that it comes with a PMI, and you have to pay PMI for the life of the loan, as opposed to if you get the conventional, you pay PMI until you've reached 20% of the value of the home, or 20% of the loan, and then that PMI drops. So that's the only difference between the two. But you can get a 3.5% down loan, just depending on what your credit score is. You're given more options as far as like the type of loan products that you can tap into.
Rose, a quick question. Um,
Yes.
is there like an optimum score or median score? Is there a point at which a higher score really doesn't help you all that much? Is there a point at which, so I know if 850 is the top, but is there a point at
Mhm.
which having a credit score higher than this particular point is not going to help you that much?
As far as like getting approved for a loan,
About as far as getting approved?
um, no, anyone. I mean, anyone can get approved. Um, is When you don't get approved for a home loan is when you're like below a 580, because now you're below the FHA. You're below the FHA requirement of you having. I know they did bump the numbers up to 620 that you need to have, but they do have home loans that will get you at a 580. Now, when when we're talking about getting approved for a credit card, You know, some people would have like a 800 credit score or 750 credit score and still would get denied. And it's only because the credit profile is too thin. That's at that point that you can get denied if the credit profile is too thin. It doesn't have enough credit history. You know, so when people focus more on the score than the profile itself, that's where people tend to get, you know, discouraged
Okay.
and wondering why. Oh my gosh, why did I get denied? I got an 800.
All
I'm
right.
like,
That's,
no.
so listen. Can you build out a credit profile for me? What would a good credit profile look like? What are some of the? Can you give us some of those elements? Because
Hmm.
I want to write them down. It says, okay, here's
Yeah.
what you need to have a good credit profile. Can you give it to us like in a 1, 2, 3 or ABC or however many
Yeah.
steps it takes?
Yeah.
Okay, go ahead.
I actually have a chart. I don't know if I can PTR it, but and if you guys can see it, but it actually has different categories. And an excellent credit score is someone that have 100% on-time payments, no lates,
Okay,
no
first,
derogatories.
so first of all, 100% on time payments.
Hmm.
All right. So if anybody is, if you're, in the chat, go ahead and somebody put that in there.
Yeah, type that
100%.
in the chat.
Yeah.
Yeah,
100% on time payments. All right. Go ahead.
100% on-time payments, no lates, no collections, no derogatory.
What do you mean by derogatory?
Derogatory is a late, you know, is a late payment. Any accounts that went behind on their payments is what's considered a derogatory. And that's usually counted within the last 24 months.
Okay. So now let's say we're building out our profile and we don't have that. Is that something you can text me or email me that form so I can actually, is that something I can put up on the screen is like a PDF or something?
I'm sorry, repeat that again.
I said that list that you were talking about. Is that something I can put on the screen so our audience can
Um,
see it? But anyway.
it's a screen. Yeah, it's just a small little picture, like an
Oh, okay.
image.
All right. Well,
Yeah.
anyway, I was just wondering. So let's go ahead. So we got 100% on time payments, no lates, no derogatories. All right. That's number
Mm-hmm.
one. What
Yeah.
would be number
Yeah.
two?
Number two is the amount of debt that you owed on your credit cards. You don't want to have no more than 7% utilization, between 1 to 7% utilization.
Okay. Between 1 and 7. All right.
Hmm.
So I wait a minute. You didn't say 0.
No,
Wouldn't 0 be the best? I mean, if
n-
I don't have any debt on my credit cards?
no,
No.
no.
Talk to us about that. That's because now I'm getting. So if doesn't that mean I'm a good risk if I pay off my credit cards to 0? Well, don't won't I look more attractive?
No.
No. Talk to us about
I
that.
mean, well, to make it simple, 0 + 0 = 0. So if you leave nothing on the credit card for them to score, there's nothing to score. So if you want
Oh,
to optimize it, if you want to optimize your score, leave a small balance on it to get the maximum score in that category. I mean, you'll have a high score, but if
okay.
you want to optimize it, leave something on there for them to calculate.
All right.
1% at least. That's why I said 1%.
So Jasmine just said, "Wow." All right. So I wrote in there less than 7% utilization, but you want between 1 and 7 so that it has something to score, and that's going to give you the best profile if you keep between 1 and 7% on your credit cards.
Yes.
Okay. Okay. All right. So we're at number 2 now, but credit goddess, before somebody
Mm.
leaves, they probably want to know how they get a hold of you because you're chopping some gems in here right now. So how can they get a hold of you before we go to the next step?
You guys can get a hold of me. The number is in my bio if you tap my picture. And for those of you guys that are listening outside of Clubhouse, you guys can send your name and email address to 888-557-5778. You can send your name and email address there so that way we can book a consultation. If you want to find out more about my services, I am the owner of Budget Credit 360. You guys can go to budgetcredit360.com and learn about my services there.
All right. So what would be the next thing? So we've got no lates. Keep the amount of utilization we want to keep between 1% and 7%. So go ahead. What would be another item on our profile?
The age of credit.
Oh.
How long you've had credit for, how long you've been in a credit game. And it doesn't only involve credit cards. It involves the very, very, very first account. And many of us have student loans as our oldest accounts. So that actually counts as part of your history. So if you want to have that excellent credit, and I find a lot of my clients are in the high 600s, mid 700s, or even 800s because of their student loans. If you have 9+ credit history, you have maximized that category. That makes up 15% of your score, which is 82.5 points. So credit history has to be at the 9+ age, 9+ years of age.
Okay, so that would be optimum.
That would be optimum. Mm-hmm.
Okay. All right. So if we can, all right. So that would be optimus. But while we're getting there, let's say I'm new to the credit game and I only have 2 or 3 years in, or maybe even less than that. There are other things that I can do, because that's going to kind of subtract from what I need from my credit profile. What can I do to make it up in other ways while I'm building up to that 9? What's next?
The other ways, well, we're talking about the other categories, but let me say this. And I know you said for some people that have 3 to 5 years, if you have like 5 to 6 years, and you're in a fair category, if you're in 5 to 6 years, a lot of creditors like to see you there, which I would say Chase, American Express, the top tier credit card companies, they want to see you at 5 to 6 years. Some will take you at 3 years, but depending on if you had any prior derogatories in the past. But if you're just clean, straight out, or just coming in to the credit game, then and you've never had a credit card, usually they'll take you as early as 3 or 4 years, right? Um, so if you're in the 5 to 6 years, you're in the fair category. But anything under 5 to 6 years of history, you're in a poor or very poor category when it comes to that. So I did see someone ask the question, should I ever close out my credit cards? Credit card is the only credit tool that you can keep open for as long as you keep them open. When you have a loan installment, anything that has an installment, meaning a term. So if they give you $30,000 and they give you 5 years to pay it off, or 30 years to pay off a mortgage. Once you've paid off the loan, your score drops. Did you know that? And the reason why it drops, because there's no longer, it expired, one, and it no longer will report on time payment after that because it ended. Now, that's not a bad thing. It just not, it would not continue to score, which is why your score would drop. But it does give you prior history. So if you're trying to apply for another loan or another mortgage or another auto loan, they see that you have mortgage credit, auto credit, bank credit. So tap into those. That's a great way to build credit. If you can't get a credit card, get a loan with your current bank. Get $1,000 loan, pay it off. That's what they want to see. They want to see that you've paid off an obligation. That's what they want to see. But as far as a credit card, it stays open as long as you keep it open for many, many, many years. And that is the only credit product that actually taps into the utilization, because loans does not touch that 30%. It does not touch the 30% of your credit score, which is the amount owed. Only credit cards. So for those of you guys that don't have a credit card, you're actually missing out on 165-point calculation. So if you're finding that your score is at the mid 500, low 500, and you have loans that you paid off, you have auto loan and you're in the high 500, low 600, if you add a credit card, you'll see your score boost just because you have one, because now you're going to be calculated on how much debt you have left. And that category is what we just last talked about. You need to be between 1 to 7% utilization to get the optimum score in that category. I hope that helped.
So, yeah, that does help. So we're getting in navigating this recession, having that credit profile is going to be very important. There are a lot of people out there right now that's saying you don't need credit cards. You shouldn't touch a credit card with a 10-foot pole. What do you say to them? What do you say to them?
You know what? Let me give you a perspective. And we talked about this a couple of shows ago, Ice. The difference between debit card and a credit card. For those, let me see in the show of hands in the chat. How many of you guys have debit cards? I'm sure everybody's gonna say I have a debit card. We all do. Okay. Now here's the thing. Debit cards does not help you build credit. It does not help you establish credit, right? You pay your bills with it, all your utilities, your subscription, your rent, your car note, your insurance, groceries, gas, things like that. So, why are we afraid of credit cards? Ask that question to yourself. Why are you afraid of a credit card?
Because everybody's told us that they're evil. I mean, that they're bad. They're not good for us.
Why? I'm just trying to understand why. Like, and you know, people associate credit with debt. But I want you guys to look at credit as a privilege. It's an allowance. Let's look at it like that. It's an allowance. That bank trusts you with an allowance. Whatever that limit is, that is your allowance for you to spend. Why we call it leverage, right? So leverage that credit card to establish credit. You already pay your bills on time with your debit card. Why not attach it to a credit card and then you use your debit card to pay it back? So all of those monthly subscriptions, bills, insurance, whatever you're paying on time, put it on a credit card, budget yourself. If you, the way I do it, the way I budget myself is that I have 2 months out of the 2 times out of the month that I pay bills. You know, you got your housing, which is, you know, pretty high. You got your utilities. I have all that due on one day of the month. And then the other day of the month is all my credit cards. I have about 21 credit cards, right? So 21 credit cards I have due in the middle of the month. So I budget twice a month. So I know in the first of the month, I have my housing, utilities that I do, and I charge that on a credit card. And then on the 18th of the month is when I pay all of my credit card bills. You can call your utilities, your credit card bill, and tell them, hey, I want my bill to be due on this day. So that way we're not living day to day paying a bill. That's insane. You know, it would drive you crazy. You always feel like there's something due, right? But if you just call them and say, hey, I want my utility bill to be due on this day. So that way you just focus on that day to pay bills, right? So when you have a credit card, you can charge all your utilities on the first or the second of the month, and then when the 18th come around, once the once the bill is issued, is there, you use your debit card to pay it back. Rinse and repeat. Build credit that way. Show that you are responsible. Many of you guys are responsible, but you don't have a credit card. You know, but this is how we build credit. Two, if you have children, you can actually add them on your credit card and jumpstart them into the credit game at 18 instead of them having to figure this out themselves. You don't have to co-sign for them. You just add them on a credit card, boost their credit up, and tell them to go get their own car if they have a job. You know, start them off with a card that they give to college students and teach them how to use it. So that way, when they turn 28, they have 10 years of credit. They have, by the time they turn 35, they have um um uh, 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 13 years of credit or 15 years of credit. Like, we need to position them, but let's not pass down the trauma that we've gone through, to them. We have to pass down the wealth, the information, that's wealth. That's the wealth mindset. Pass down accurate information, not fear, but accurate information, and teach them how to do it. But you have to do it yourself. You have to do it yourself in order for you to pass down something for them to take on in their lifetime.
Okay, so here's what I here's let's see here. If we can talk about this just for a second. Are you saying it would be beneficial for me to build out my profile if I pay my monthly bills with my credit card and then pay my credit card once a month? Is that what I'm hearing?
That's what you're hearing. Yep.
Okay, now can in a couple of steps, what is the benefit of that? Because that sounds like I'm paying my bills on my credit card, and I'll never I can't control my debt if I'm paying with my credit card instead of my cash. Talk to us about that.
Well, well, no. If you have cash, right, you're paying your bills with cash anyway. So if you put it on a credit card, you still have to use the cash to pay the credit card. Is the credit card is just a tool, right? It's not something that it shouldn't be used. It's a tool, and it's a tool for you to calculate the great consumer that you are. You're responsible, you're disciplined, and you're having that documented. When they say men lie, women lie, but numbers don't lie. And when you're dealing with creditors and lenders, and they pull your credit report, which is AKA your financial resume, this is what you're building, your financial resume. If you're not building out your financial resume, you're going to these creditors and these lenders bare with no history. So this is a great way, a benefit, to get a credit card, so that way you can document how well you pay your bills, because debit cards are not documenting that. The banks see it, and it's coming directly out of your checking account, right? But it's not documenting how well you pay your bills. It's just for you to know where you pay your bills to, but it's not documenting for creditors, future creditors and lenders that you want to do business with in the future to see that. So that is the one benefit. Two, when I say pay your bills once a month, especially utility bills, it's just a peace of mind. When you're budgeting, it gives you a peace of mind to know where your money is going, because you're telling your money what to do, not your money telling you what to do. See, we need to change that. See, we work day in, day out, working to live, not living to work. So if you manage your money, and you know what to do with your money, and you're telling your money what to do with a budget, then it gives you that peace of mind where you're not feeling like every single day I'm living to pay a bill. You know what I'm saying? So, and that's the reason why a lot of times, like, I saw someone in the audience in the chat ask that they're about to close out 3 cards. Now I'm going to ask you why you want to close out those 3 cards. Now, if those 3 cards are like cards that you're paying annual fees to, like if you have an annual fee that you're paying every year to, or it's not giving you any cash rewards or any benefits, if you're not getting anything from that, yeah, you want to close it out. But if that was one of your oldest accounts, I'm gonna just let you know it will drop your score, because it did contribute to the age. So if it is your oldest account and you don't have an account that's older than that to hold the age, then yeah, I'm gonna let you know that you're gonna lose some points there.
Okay,
right?
so here's the thing. You're talking about history, okay? And
Yes.
in history, okay, so when you have that card out there, you've got a card that you've had for years, and then you just say, you know what, I don't use this card very much. And so what you're doing is essentially is wiping out years of your history that the companies are using to create your credit score.
Yes.
Wow.
Yes.
So don't do it.
Yeah.
Don't. So
Don't do it.
don't do it. Don't do it. You're wiping out your history. Most people think that I'm going to improve how I look if I reduce the number of cards by taking that out. And what we're trying to show you here is, what does a great credit profile look like? Okay, it's the profile that they look at, not just the score, but who you are in totality. So the number of credit cards, what's the word I'm looking for? The number of types of credit. So I've got cards, and there are other types of credit. So and then I'm going to end on this point about paying monthly bills with your credit cards, then taking the cash and paying off the credit cards. What you're doing is two or three things, if I'm understanding you right. You're creating a track record of paying off on time. If your credit card is what do you call it, a rewards card, you're getting cash back or points or miles or something, so you're getting rewarded for using the card. And then you're also, all of this is looking good on your credit profile to help build it out. So by using a credit card can not only make you look better, it can actually pay you to pay your bills.
Yep.
Listen, I like that. I like getting paid to pay my bills. How about you all? So listen, I've got people on Shanika Knight on from Facebook is saying this is great information. Thank you both. Credit Goddess Rosalind Lewis, thank you so much for what you're bringing to the stage today and helping us to navigate buying houses or anything else in this recession. Take the time to make yourself to build up something that you can use, a great foundation. So so we got the age of the credit. What's the next thing we should look at in a great credit profile?
Ooh, another one. An excellent credit profile has 21 plus accounts reporting.
What? Oh, wait a minute.
21
Wait.
plus.
What do you mean? 21 accounts reporting?
Yes.
What do you mean 21? You mean 21 credit accounts?
No, not credit accounts.
Okay.
Accounts. A mix of accounts.
Okay.
Credit cards, installments, mortgage. Okay, so let me tell you this.
Okay.
When I look at credit profiles, and I see someone that's in a 700, sometime I
wait a second, Rose. I hate to interrupt you, but this is so good. This is so good, folks. We have right now 33 people in here. We've got so good information that's coming down the road right now. I need you to jump the shares up. We got 3 shares. Can you please share the room? If you're getting anything out of this, share the room. Get some other people, because when they see it in the hallway, they'll come in and they'll get some of this information as well. You're active in the chat, but I also need you to go ahead and share the room while Credit Goddess is talking. Go ahead, Credit Goddess, and finish up your point.
Oh, someone asked, how do you share? At the very bottom, do you see the little box with the arrow pointing up next between the scissor and the chat? That's the share button. So you can share it in the Clubhouse. You can invite people. You can even share it on your Twitter, Facebook, and WhatsApp or text. Awesome sauce. Thank you guys for those that shared, all 7 of you. And I'm sure more of you guys are doing that. This information needs to be shared, because how many of you guys are going to be able to regurgitate what I just said? So invite your friends into the room, so that way you don't have to regurgitate this. It's coming out of my mouth. And you guys can ask questions. They can ask questions, because I'm sure it's just going to start sparking all types of light bulbs up in their heads. But 21 plus accounts. Now, the 21 plus accounts can be open or closed. Okay, open or closed. It doesn't have to be open accounts. It's open or closed. And believe it or not, your collection accounts, those medical debts, are also counted as an account. Okay. So when you guys go through credit repair, when you guys go through credit repair and get accounts removed, you will see your score drop. It's an up and down motion. So when people focus so much on the score, it will drive you crazy when you're going through credit repair. And I find that a lot of people hop from one person to another or one company to another when they're repairing their credit because they'll focus so much on a score. But really, what you need to focus on and what you need to look for is if that particular company is going to coach you on how to improve your credit, how to optimize your credit, how to rebuild your credit. It's not about credit repair. Credit repair is like, let's use the term in real estate investing. When you hire a demolition team to remove the roof and the floors and the walls, and they take away, but who's going to add back? Who's going to add back the walls? Who's going to add back the roof? Who's going to add back the ceiling, the floors? So, and I'm saying this because I've been doing this for 6 years, and I've when in the 6 years when Lexington Law was popping, y'all remember, I would get clients from Lexington Law. Lexington Law did their job. They did remove some stuff, as you guys look for. You guys look for things to remove. But a lot of you guys thought that just because it got removed, your scores would jump up. No, you have nothing. If there's nothing on your credit report, there's nothing to score, right? So you need to add. And Lexington Law does not teach you that. They don't teach you what you need to do to improve your credit. They just do their job, which is removing. Okay. So when you're looking for a credit company to assist you, you want to look for credit restoration or a credit coach, right? If you need improvement. And that's what I am. I help you coach. But in order for me to coach, you also have to participate, which is why I always say it's not a sit back and relax. Sit back and relax is credit repair. If you're gonna be coached, you need to partake, you need to participate in what is it that you need to do to improve your credit. And I coach you on that. Everyone needs coaching because everyone is starting off on a different footing in credit repair.
So it's
Some of you guys just go ahead.
so it sounds like that um you don't naturally come by this information. It's not something that you can actually acquire accidentally. If you have
Right,
if you have some help, then you can play the credit game right.
right.
Okay, so
Yes.
that 21 accounts and some of them closed. Do you mean by a paid off car counts as one of
hmm
those?
Yes.
A paid off
Paid off
medical
card.
debt is a closed account that would count as one of those.
Yes.
Okay.
Yes.
So just to be clear, we're not talking about closing out a credit card. We're talking about closing out another type of installment loan.
hmm
Okay. So
Yep.
a mortgage, you got a loan for your curtains in your new house, or a loan for your fence that went around it. So when we paid those off, now we're building up these accounts. So start early. All right. Learn how to borrow money correctly and start building on those 21 accounts. Start now, and you'll get there sooner than you think, right?
Facts. Yeah.
Okay.
That's what creditors look for when they open. And this is the analogy I like to give. The credit score is like a book cover. When they say never judge a book by its cover. So when people come to me and they come to me with, their eyes closed and like, oh my gosh, I don't want you to see my score. It's horrible. I'm not focusing on the score. I'm going to open up your credit profile and I'm going to see what's in it because it's the book, the actual book in itself. When I open up that book, when I open up this financial resume, your credit report, I want to see what you've done in the past couple of years. That's what creditors are looking for. They want to see what have you done, right? They want to see your stats to see what type of credit card or what type of loan that you qualify for based on your experience. So if you're not tapping into the credit game, then you don't have any experience. That's the whole thing. And the credit score just helps the lender and the creditor know what type of borrower you are before they even open up that book, if it's a waste of time,
Wow, wow, wow.
And see, right?
Wow.
So let's not focus so much on the score. Let's focus on building up that profile with experience. That's what they're looking for.
All right. So now we're talking about how to navigate. Should I even buy a house in this recession? But before you buy a house, you got to have that credit in shape. I mean, you got to work that thing out. You've got to be in a position where you are looking strong and healthy when you enter into that market to buy that house. So this credit profile, if you're thinking of it in terms of health, okay, if you're thinking in terms of health, you want the healthiest profile, period. You don't want a profile that's anemic. All right. You don't want a profile that can't breathe. Okay. You don't want a profile that when people look at, their colors off. They look they look sick. You want a credit profile that looks healthy. Do you have any other points about building up a credit profile, credit goddess? Do you have any others?
Yeah, one more. This makes up the last category, which is new accounts.
Okay.
This is going to drive everyone crazy, which is why I say do not focus on scores. If you add a new account, it will drop your score. Okay. Which is why, like you just said it, Don, build early, right? Build it up to the point where you don't need credit, in the future, right? You want to do that in the period of the 2 years and the 3 years. You've established it to the point where you say, you know what, I'm working to get that American Express, but it's going to be in the first couple of years that you're building out to the point where you don't need it anymore. Because once you add a new account, it will affect your age. And you guys seen this before. Have you ever looked at like any of your credit monitoring and it shows you that your average year of credit is 1.5 years when you knew you opened up your credit card 5 years ago?
Right.
But you have your
Right.
You seen the report? Yeah. So what it does, it adds up all of your accounts, and then it adds up the years and divide the years into the amount of accounts that you have, which would then give you your average age of credit. So that will go up and down. This category makes up 82.5 points. And remember, I said you need about 9+ years to get all 82.5 points. So when you add a new account, it will drop that 9 years to then maybe 3 years. And depending on how many more accounts you've added in that period, it will drop it up to maybe half a year or 1 year, right? So that it affects that age. And that's why you may see that your score went from like a 700 to a high 600 or maybe a little bit lower. But over time, you will get those points back because it kept that. Okay, go ahead.
No. I'm sorry, Craig. I'm just so excited. So
I know. You just like getting all the ad-libs.
Okay, so you're saying, yeah, your overall age of credit may go down, okay, on one hand, but you're getting the needed accounts on the other hand.
That right? Yes.
Okay,
yes.
and so build up early. Start early.
Start early.
Okay, now what does early mean? Early for me, if no matter what age you are, okay, and you don't have these things in place, early means now.
Yes.
Don't lament the fact that you didn't do this 20 years ago. Early means now for you. Start now.
Right.
Okay? Talk about it.
Yes. I say this all the time. If not now, then when? Because they do count that against you if you're starting way too late in the game. It's like, where have you been? You're 40 years old. Where have you been in the last 20 years? So they treat you differently as opposed to an 18-year-old or a 20-year-old that's just coming into the game. They have to take that into consideration. It's like, who are you? Where are you coming from? Like, why are you looking into this right now? So some creditors won't even check for you. You have to build twice as hard than if you had started way early, which is why I always tell parents, get your kids in the game early as you can. And even if you're 35 or 40 and haven't tapped into any credit cards and things like that, still don't let that hinder you if you get denied, which is why I coach. If you hire me as your coach,
Come on.
I will coach you in the right way. This is what you're paying for. I don't want you guys to waste inquiries, because now I got to remove those. And that's becoming difficult to remove too now, so let's not make all these mistakes before you look for help. Get a coach, any coach. You don't have to hire me. If you know someone that you've built that relationship with and you resonate with anywhere, and they are educating the masses about the proper way of establishing and building credit, tap in with them. Tap in with them. You need it. If you want to be the best player in the game, the best players had the best coach, right? And you're going to fail, but it's a matter of succeeding. It's a matter of practicing and putting in the right things that you need to do in order to optimize and get the best score. So
Wow.
yes, you can do it on your own, but you got to do many research, many trial and error and things like that. But it's best that you sit on or stand on the shoulders of a giant that have already done this and seen all types of credit profiles that can help you along the way. So that's the tip I want to give to everyone.
Credit guys, we're coming up to the top of the hour, and we're going to do a quick reset. But before we do, I want you to drop something on us in terms of getting approved. Okay, getting approved. What is the best kind of approval? Is there an approval where I don't have to worry about somebody who got up on the wrong side of the bed looking at my credit thing and saying, you know what?
Right.
Nah, they don't get credit today.
Exactly.
What's the best kind of credit approval? Can you talk about that?
Yeah. I'm also a broker. So I help entrepreneurs that are just starting up, or even entrepreneurs that are in the rise of their business and looking to grow and scale, gain access to capital, right? There's all kinds of money that's out there, right? And they will look at your personal credit. I don't want to say there's no way around it. There are ways around it if you have the capital. But if you don't have the capital and the only thing that you have is your good name, your credit, you can get approved. Now, I've gotten in the past 4 days, I've gotten 9 of my clients approved, anywhere between $40,000 to $90,000 in business credit that they can start with their startup. These were real estate investors. Otis. Otis has his room. I've gotten a couple of his students approved for business credit, so that way they can use it as leverage to tap into the real estate space in investing. Yeah, yeah. So we're So we're actually meeting today to talk about how we're going to strike, because I don't want anyone going into credit into the real estate investing without proper coaching. So we're actually going to sit down with these students that gotten approved and strategize how we're going to use those funds, right? Because I don't want them making any mistakes, because I don't want to fix any mistakes. So let's go about it right. I'm the money person. I'm the credit person. Let's talk about strategizing how to use this leverage, right?
Ooh,
So, yeah. So, now with this funding source that I'm using, I love them, because what they do is they do a soft pull. They don't really do a hard pull or anything. They do look at your credit report, and they tell you if you have any limiting factors of like what's going to affect you. And you know what I'm saying? The limiting factors of getting approved with the credit cards that they're going to get you approved for, late payments. I would see scattered late payments. If you have scattered late payments, meaning if you had payments 2 months ago and then you had another one 2 years ago and stuff like that, that can prevent you from getting approved. It's a limiting factor, not saying that you won't get approved, but for certain creditors, they don't like to see late payments within the last 2 years or a year ago and things like that. That will limit you from getting approved. So what I would advise people to do is make sure that you stay on top of your bills, right? And if you haven't, start right now, especially if you're looking to purchase a home next year, you're looking to start your business next year, and you've already had a year streak in paying your bills on time. Let's prepare you from this go round. And I'm telling you, let's prepare from this go round. Stay on top of your bills. Don't be late. If you are late right now, not 30 days late, but within 30 days late, call your creditors right now. Let them know that you're in a financial bind, or make that payment so that way you're not going 30 days late. Because that's when it reflects on your credit. When you're 30 days late from the last payment that you have not made is when it hits your credit. Not when you're 2 days late, a week late, 3 weeks late. Don't let it go 4 weeks late of your last payment, because that's when it will reflect. Okay. So to get approved, they don't like to see inquiries made within the last 6 months. Some creditors don't want to see any inquiries in the last year. Okay. So keep that in mind. So if you've inquired, or if you try to apply for a credit card within 6 months and you have a couple of those, like no more than two, you have to wait until that season out, or call and see if you can get those inquiries removed. And I know
Wow.
someone's going to ask, how do you remove an inquiry? Well, you have to pretty much say you didn't authorize it. All right. Because you can't just say, I want it off my credit. No, you have to pretty much say you did not authorize it, even though you know you did. But the proof is going to be in the pudding when they're going to call the creditor that you try to apply for. And if they can show proof that you did, authorize it, then usually it stays on. But you basically have to say, I did not authorize it. And that's how it comes off. You can call that in, right?
Okay.
No collections in the last year or two. All right. No collections at all. Let's just say that. So if you can pay some of those collections off, they like to see that. Because if you have any lingering collections with a balance, to a new creditor or a new lender that you're like looking to do business with, if you have lingering collection accounts with balances on them, it's a risk, because they feel as though you may go into default with them. So you want to take care of your responsibilities.
Let's talk about
Right?
that. Let's talk about that, credit card, because
Okay.
this is important.
Okay.
This is the last thing before I go into the break and do the reset. Those collections out there. All right. You definitely want to do that with a coach, especially if you're getting ready to go into to buy a house or something like that. There are some collections you don't want to wake up. You don't want to do this on your own. Am I right? Is there something you just want to let sleeping dogs lie? Is there such thing as that?
There is such thing. There is a such thing. Okay. So when and I'm gonna use this because this is applying to, like, if you're going to repair your own credit, if it's so old, like 4 or 5 years old, and it's past its statute of limitation, don't wake that up. Don't wake it up. And I'm gonna tell you, some lenders don't even look at that, from 4 or 5 years ago. If it's anything within 2 years is what's factoring into your score. And if it has a balance, it's factoring into your debt to income ratio. Those are the ones that you want to take care of. Any debts with a balance on it, it's affecting your debt to income ratio, especially if you're looking to purchase a home, right? Take care of those, and then show proof that you paid it off, and the mortgage broker would do a rapid rescore, which what they'll do is remove that account out of the equation, and then you get a new score, right? Medical bills don't really count in the equation, especially when it comes to FICO 9. Your FICO 9 credit scoring model or algorithm, it doesn't include medical debt. So it's a good thing there. But there are some lenders that still use FICO 8 and all the other FICOs that includes the medical debt. So those are the things that you want to take care of. But if it's so old, you don't want to. Now, if you're going to tackle it, I say you can tackle it yourself, but know what you're doing, but don't use the basic term, it wasn't mine, and things like that. Because once they see that you're saying that it's not mine, it's like you're trying to run away from your responsibility. And they're like, oh, okay, David, I see what you're doing. Let me go ahead and revive this. Since he wants to say it's not his, I'm a prove to him that it's his.
Lord
And then
have
now
mercy.
they'll come after you. Yeah.
Listen, folks, here's what we're talking about today. We're talking about trying to navigate getting through this recession, getting through, the hyperinflation Oh my gosh. I mean, it's the inflation that is the part that we're going, it's kind of a pre-recession, but it's the inflation that's getting us. We want to make sure that we're looking healthy, that our finances are healthy. We want to do what we can to make sure that we can get the things that we want and need when it comes to using credit. So we're going to be talking about a little bit about coaching and that sort of thing and how you can get hold of Credit Goddess. But I want to tell you folks, having a coach is important when it comes to your finances. The people who have the most money, the people who are doing well, have financial coaches. And I'm getting ready to play a video here of a person who has used the P.I.L.L method as their financial coach. I'm talking about none other than E.T., the hip hop preacher. Yes, Dr. Eric Thomas has used the P.I.L.L method as one of his financial coaches. I want you to watch and listen right now. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L Method. I invite you to watch and listen.
Listen to me, y'all. One of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today. All right, ladies and gentlemen, you heard it. Dr. Eric Thomas paid off all of his debt in an average of about 4 years. Our average client does it in 7 to 9 years. If you want to know how you can know the month, day, and year you can be debt free, click on that link at the top, or go to ice10k.com, ice10k.com, and click that link that says get a savings and earnings report. Fill out that information, and one of my staff will work with you and get you a savings and earnings report. Go ahead and fill it out. You'll know the month, day, and year you can be debt free and how much interest you can save. And also, folks, get my book. And it's a #1 bestseller at least 5 times on Amazon. When you get the book, all right, what you're going to find out is the basics of how to deal with your credit once you get it. We're going to make sure that once you can get that credit that Credit Goddess is talking about, you'll be able to pay it off efficiently. What do I mean by that? By understanding how the loans work, how the bank is charging us 75% more interest than we need to pay, and we don't have to pay that. Okay. Once you understand that, you can now have more of your money go to paying off the debt than paying the interest. And you don't need more money to do this, folks. I'm telling you, you can use your current budget, and by disrupting the bank's timing, you can make it impossible for them to charge you all of that interest. Get the book, and then once you get the book, guess what? If you go to the ICE 10K, my digital business card, ice10k.com, you'll see that you can, in the instructions there, upload your receipt and get a digital business card of your own that's worth $100 that we will pay for you. So listen, folks, we're going to get back to Credit Goddess and what she was talking about. But first, we have to acknowledge Miss Coffee Brown. Miss Coffee Brown, how are you doing today?
Hey, Credit Goddess.
Hey, Miss Kai.
Good morning. Good morning. Don, how you doing? You preaching to the people this morning?
Listen, Credit Goddess is holding it down today because we're talking about getting our credit in shape, our credit profile looking strong and healthy, so that we can navigate these waters and do well. And then we're going to talk about if we should buy a house in this recession or in this hyperinflationary climate. Should we go ahead and buy a house, and how can we get there? But without the credit in shape, oh, listen, we're stuck. We're stuck at home plate. We can't even get to first base without good credit. So
I
anyway,
agree.
all right, Coffee Brown, talk to us and tell us who you are and what you do, please.
I will when I get to my office. I'm going into a storm right now.
I get it. You listen, pay attention, pay attention. All right, Credit Goddess, we're back. We're back with you now. Listen, can you talk to us about getting that credit profile in shape so that when you apply, because I have taken the time to get in shape, I've gotten approved for credit cards in seconds, not in days, but in seconds, almost as soon as I pushed send. How does that happen? How does that happen when we can get approved so fast? Is somebody out there reading my credit profile in seconds and then making that decision? How does that happen?
It's automated. It's automated. So you have automated approvals, and then you also have manual underwriting. Okay, so when you are going for a loan, that's manual underwriting. So you have an underwriter that will take a look at all of the documents, not just your credit report, but also your income, tax returns, and things like that, which is why it requires so much paperwork, because this is a lump sum of money that you're requesting, right? So when you're trying to get a business loan, a home loan of a great amount of like 10,000 or up, right? They're going to ask you for those type of documentations, and that goes through manual underwriting, and they take all of those things in consideration. And the consideration they're looking for is, are you able to approve, and what amount are you able to be approved for, right? And then they'll determine what that is. So you'll get a pre-qualification, and then you get approval of what that amount is going to be. But the pre-approval is going to be based on the documentations that you submit. So when you're going through the home buying process, submit all those documents that they're requesting for. I know sometimes we tend to get frustrated because we're working and they're asking for this and that, and we have to wait till we get home and things. But make sure that you know all of the documentations that you need to provide and how it needs to be submitted. Because sometimes you guys are not submitting it the right way, or you're giving too much. Don't give too much than what they're asking for. Give them exactly what they're looking for, and do that. So that's pretty much like manual underwriting. Now, approvals, automatic approvals, this is when you want to make sure that you are in position. And it all depends on which creditor, because every creditor have their own guidelines, right? So before, and I'm gonna give you guys this tip, before you go and apply for any creditor or even lenders, I want you guys to interview them. You don't need them, they need you.
Wait a minute. That's not our usual MO. Listen, we go with hat in hand and say, please, sir, may I have a loan?
They don't need you don't need them, they need you. But see, the way as us as consumers, the way we approach things is that we need them, and they can tell. And they can tell, especially when some of you guys are not in position for whatever that is that you're asking for.
Oh, wait a minute, credit guys. Along with all the tips that you gave us, a coach can give us the proper swag when we walk in to get our loan.
Yeah. Put you in that nice suit.
Come on.
Nice suit. Listen, you gotta dress yourself up. You can't just go in the banks any kind of way. You be seen this back in the old days when they used to come in with their suit and their briefcase, looking all nice and got their little paperwork, and their resume, and they're asking for. That is how we're looking. We're not going into the bank all dressed up now, but and this is the reason why they say men lie, women lie, but numbers don't lie. That credit profile, that credit report, that is your suit. So you want to make sure that is nicely dressed up.
So,
right?
so credit card. So you're saying if I have the coach, you're going to give me the game plan. You're going to say, if you have these things in place, you go in, and then every question, as they look at you, they may make some assumptions about you until they start asking questions. And when they start asking questions and you start laying that documentation on them, yeah, I got that. I got this. I got everything you're asking for and then some. Okay.
Yes.
And so you're going to give them how this is going to work, and then give them an idea of how it's going to work. And they go into the bank, they're going to walk out with what they came in there for, because you're going to give them the game plan. So you know what's really bad? When something that a business person should know or should have, and they go in unprepared, and then you say, oh yeah, let me go get that. Is that what you're going to prevent?
Yes. I'm preventing those unnecessary inquiries that a lot of people try to avoid, right? And I know why you guys are trying to avoid it, because you don't know if you're going to get approved or not. So you don't want those unnecessary inquiries, right? And it will drop your score, which that's another thing we another topic. But you want to make sure that you go in there and you know that you're going to get approved. Always approved, never denied. But it's a matter of knowing what your profile needs to look like and who you want to do business with, and that you are in position to get approved for it. Just like, if you want to go to the Ivy League school, Harvard or Howard, right? You know what qualifications that you needed to be eligible as a student there, to go there. You want to make sure that you have all those things together. Right? You got the GPA, you've taken all the classes that you needed, you write that great essay, or whatever the requirements are, because you don't need them, they need you. So we need to look like that. We need to know what it is and who we want to do business with, right? If you want to do business with American Express, find out what their requirements are, so that way you can be one of those numbers.
I like
if you
it.
want to be with Chase, right? You want to be with Chase, find out what is it that you need to do to be one of their numbers. And I'm going to tell you, with Chase and American Express and Citibank, if you already have a relationship with them, you already have one leg in the door. You already built that relationship. You're already in. You get first dibs than someone just walking in that never built that relationship with them, right? See, it's all about relationships. You already have that. So find out what it is that you need additionally to get those type of, now they have different level cards, different tier cards, right? You got some that are higher than others. You can start with the lower end and then you work your way up. That's the tip that I want to give everyone. Go in there as you, as the creditor, because that's who you are, right? And to open up an account with them, find out what it is that you need to do, so that way you can get approved with them, because
Okay.
you don't need them.
Listen, I just wrote that down. I just put it in the chat. Always approved, never denied. All right, folks, I need you to put that in the chat as well. As we go over these points we're just going to do a quick overview of the points that are build out a strong profile. And then I'm going to get into if we should even think about buying a house in this pre-recessionary, hyperinflationary time. I'm going to show you some of the things that you need to talk about, need to think about, and know that you can buy a house in this time. So, Credit Goddess, what are those points again, quickly, on how to build out a good credit profile, make it strong and healthy?
Okay, so you need to have 100% on-time payments, and 99% is good, but 100% is what we need to strive for the best. 100% on-time payments, no lates, no collections. If you guys want to remove late payments, there's if you guys can draft up a letter for those writers out there, there's a code that you can use. And Lowe's shared this yesterday. And I always forget the code, but it's written by Congress, you guys. And I want you guys to understand this. Your credit report by Experian, TransUnion, Equifax, and all these data reporting agency, they're just an LLC, you guys. They are just a business. They're in business to sell information to creditors and lenders. They draft up all of you guys and put in the portfolio, put you and the guys in a package and send them off to these creditors and these lenders, because that's a better way for them to get access to you. That's why you can check your mailbox and find all these credit card offers and loan offers in the mail, right? Because you were sent in a package to these creditors and lenders when they bought the package to sell you a product. All right. This is a business. It's not part of the government or anything like that. You hear Joe Biden is trying to make this a government thing, and where we have the social credit. I don't like the idea, but I mean, hey, if it's going to work, it's going to work. But these are businesses, you guys. And that credit report is your reputation. I want you guys to take that seriously. Your credit report is your reputation. This is information from all these creditors and lenders that have done business with you. When you're looking through your credit report, you want to make sure that the information is accurate. And I don't want you guys to look at it from the surface level as, oh yeah, I did have that AT&T account. Oh yeah, I remember Chase. No, I want you guys to look through it line by line. The information is different, which is why you have 3 different credit scores. It's coming from one source. So why do you have 3 different credit scores? They should all be the same, and no more than 5 points apart from each other. If it's more than 5 points apart from each other, then something is being reported inaccurately. And there is a law. Fair Credit Reporting Act states that anything that's on your credit has to be 100% accurate, 100% complete, verifiable, and reported timely. If it's not any of that, it cannot report on your credit. That is against the law. Okay? So I want you guys to use that law. Now, I'm going to go deep. There is the 15 USC code 1681A. If you guys look that up, and in summary, and I say that the credit report is your reputation and it's relationships that you've built with creditors and lenders. And I'm going to use this analogy. If you and a significant others are married, should anybody know what goes on behind closed doors? No, it's none of their business, right? No one should be sharing what your experiences and what goes on with transactions that you've made behind closed doors with you and the significant other. So look at it like you and American Express. Okay, everyone should know, all the lenders and creditors should know that we have a relationship. But as far as my transactions, like my payment history and my history and my experiences, like those late payments, that's none of their business. That's what that code is saying. Read it. 15 USC code 1681A. Scroll down to what it says, what should be excluded out of the credit report is transactions and experiences. If you want to remove a late payment, that is the code that you want to use. It's none of their business. All right. Now, if you want to if you want to use and add on another code, which is your right to privacy, because that's public information and you don't want that to be public. That's 15 USC 6801 and 6802, which is preventing the information to be reported publicly. Again, the credit report is just a product by these credit reporting agencies, and they sell that information. No one should know what you have going on behind closed doors with that particular lender and creditor. If you want to remove any of those informations, those are the codes that you can use. Draft up the letter, go ahead and research case laws, because there are case laws pertaining to that. Consumers that have won their cases because they leverage that. Okay, that's what credit repair is all about. It's not about just deletions. If they do not remove it, you can actually sue them for willingly reporting inaccurate information. That's defamation of character. And if you got denied of anything, housing, a job because of your credit report, a loan, a home loan, you can actually sue them for punitive damages. because of it. So it goes really, really deep, you guys. Credit repair is more than just deletions. It's the law. You have consumer rights. And when we're talking about practicing consumer rights, if you have this information plastered about me and I'm telling you that is reporting inaccurately and it's affecting me, it's affecting my credibility, that is your consumer rights. That's what Congress put on there. You guys can go look it up. The TUSC code that is written by Congress for these businesses, these credit reporting agencies to abide by. So know your rights, practice it. That's credit repair. Okay.
Wow. So we
I'm
got,
gonna leave it at that.
all right. So let's go ahead and finish up those last points. And then we're going to talk about how to get a hold of you as our coach. Okay. Hit the rest of those points.
Okay. So make sure that you have on-time payments. I already touched on late, so go ahead and tackle that. You want to make sure that you have you have utilized 1 to 7% utilization. Okay, on your credit cards. Okay, if it's reporting any outside of that, you want to bring that down. And if you guys hire me as a coach, I will teach you how to avoid paying interest, because I saw someone mention about we still pay interest on that. There's ways about it. We just have to write it out. And that's a strategy, okay, to avoid having to pay interest on that. And then still report 1 to 7% utilization. Third, you want to at least have 3 to 5 years of history in the game. But to have that optimal score, you need to have 9+ years. Okay. So the older those accounts report, the better. And credit cards give you that, right? You can keep those accounts open as long as you want, 30, 40, 50 years if you want, right? That's that. You want to have age, I said 9 years. You want to have 21+ account. That's a perfect credit score. But if we want to say on average, you want to have a good 7 to 9 accounts, 7 to 10 accounts reporting. All right. That can be a mix of student loans, credit cards, installment, auto loan, and even a mortgage. If you have a mortgage, installment, and a revolving account, that's the trifecta, right? I get clients that wants to start their business, and if you don't have a home, that can be a hindrance. Truck drivers out there, if you don't have a home, sometimes that can be a hindrance for you to get that $100,000 loan to get that truck, that semi, right? So if you have a home, that's one of your largest trade line that actually can get you more funding, and that can maximize your funding because of that trade line, that mortgage. Okay. And then you want to have 0 to 1 new account reporting, and that's like every 6 to a year, right? You don't want to have too many new accounts all together, but sporadically, in moderation, open up new accounts every 6 months to a year, so that way it doesn't affect your score altogether. So I hope that everybody got that. So that's 100% on-time payments, utilization, which is 1 to 7%. You need to have a good 9+ years on average. Let's say 3 to 5 years. 21+ accounts for perfect credit, but on average you want to have 7 to 10, and then 0 to 1 new account. That's a perfect credit score.
Wow. Thank you very much, Credit Guys. So if you're not perfect right now, do I have to be perfect to start to apply?
No, you don't have to be perfect.
Okay.
That's all part of building.
All
Yeah,
right.
that's all part of building. You just don't want to have those data points, the derogatories that will prevent you from getting approved with that particular lender or creditor.
So
Just make sure that you don't have those derogatories.
So if I have less than perfect profile, but I work with you, you're going to tell me how I can avoid unnecessary inquiries, because even though I'm not perfect, you're going to get me in shape so that I can at least limp into the office.
Absolutely. You said limp into the office.
I can limp into the office and walk out with the credit. Okay.
Right.
Okay. So listen, folks, she's going to get you in good enough shape so that you can limp in and walk out with the credit while you're on your way to building that perfect credit profile. Thank you very much, Credit Goddess. Listen, you have been fabulous today. Now tell the folks how they can get a hold of them and how they can get a hold of you. And then I'm going to just go over a little bit about once you get the credit, how you can maximize it.
Awesome. Yes. So, guys, you guys can reach me at the number in my bio. If you tap on my picture, you can send your name and email address to 888-557-5778 and book your consultation with me. I do free consultation where I explain to you what my services has to offer. But if you want me to dive deep into your credit, it's only $50, you guys. I'll dive deep into your credit and tell you exactly what it is that you need to do to improve it on your own. Or if you decide to hire me, at least you know what I'll be working on.
Wait a minute, ma'am. Wait a minute. Wait
Uh,
a minute. Wait a
okay.
minute.
Okay.
Did you just say that for a week's worth of Starbucks, maybe 2 weeks for some people, that they can get your support in making certain that they're on the path to financial freedom, literacy, and the ability to do other things? Is that what I heard you just say?
That's what I said. That's what I say. That's what I said. You know what? Kind of look at me like a credit doctor. You know, you guys are experiencing some symptoms and you got to pay that $50 copay. That's what that is. Come to my office, right? And I'll do everything that I need to do to determine what it is that's affecting you and what you need to do to improve it. This way you have a blueprint and you're not trying to figure it out listening to everyone else, because everyone has a different credit profile. So what worked for one may not work for another. And sometimes you could hurt yourself because a lot of people that try to get funding for their business, they're affected because they've tried everything that they've heard on YouTube and everywhere else. And I have to kindly, unfortunately, tell them, we got to wait till next year.
Oh boy.
We got to wait till next year. And it's like, oh man, yeah, because you guys tried too much stuff. It's almost like, try to get healthy and you did everything to try to lose weight and it just got worse. Yeah, don't do that. Come to me and I'll tell you what it is that you need to do. That's the $50 plan. So when you send your name and email address to 888-557-5778, a link would appear and you click on that and that's my booking. You choose personal credit analysis. That's the one that you want to choose. And I will tell you exactly what it is that you need to do to improve your credit. That is it. You can do it yourself. I prefer that you do it yourself, because now you are a part of the process. You're going through it yourself and you know yourself what you need to do to work on it, right? If you hire me, I'm just your coach. Okay. So definitely tap in with me. If any of you guys are looking to establish business credit, I also have that as well. DIYs, done for use, either one. I don't want you guys to just try to figure things out. We need to focus on our genius. We need to focus on stimulating the community and staying afloat in this recession, right? So let's go about it the right way. So we're not going through trials and tribulations during the recession, because millionaires are made at this point. So let's get the right information, the right coaching, so that way you're in the best position to ride this recession wave. So thank you guys so much, and I'll hope to assist many of you guys in the chat.
I sure hope so. Listen, folks. Listen, if you've received some information that you can use, I need y'all to put a number 9 in the chat. Put a number 9 in the chat if you got something out of this. Come on, put it in and share this room. Miss Coffee Brown, I would like to touch base with you if I can. I don't know if you're available to be able to speak with us or not, but I sure hope you are. Miss Coffee Brown, could you go ahead and talk to us about who you are and what you do?
Don, first of all, let's give another round of applause for Credit Goddess in the building. She I'm over here fired up and excited. Thank you, Credit Goddess, for all that you do to add value to the community at large. And that's what it's all about, guys. It's about community adding value at large so that not only we can eat at the table, but you can eat at the table. Now, you might not eat at my table, but we want you to eat at some table. So good morning, everybody. I am a certified master life coach. My name is P. Coffee Brown, eloquently known as Coffee Brown, and super excited to be in the building here with Don and the amazing credit goddess, Pastor Don, Reverend Don, Deacon Don, whatever you want to call him, Professor Don. He is amazing and incredible, and we're honored to be in the same space with him and sharing this information. I'm a certified master life coach in concentration to help entrepreneurs, collaborators, and creatives to be able to understand that it is imperative that you have a published work. You have to have a published work. When people look to get with you for speaking engagements and coaching sessions and things like that, they need to have some type of documented proof that you are a SME, that is a subject matter expert. And so you're deemed as such when you produce a publication, and we help you do that. We help you get that thought out of your mind onto paper and into a publication, a published international best-selling work, not just a published work, but an international best-selling work. Our publications have reached all 7 continents, and so we're in the process of adding value to the educational system at large right now. And we would love to participate in your wins as well. So again, my name is Coach P. Coffee Brown. And remember, you can never have a great conversation without a good cup of coffee. I yield to you, Don.
Thank you very much, Coffee Brown. Listen, folks, we're here now that we've got this good information on how to level up. All right. We need to have a healthy credit profile. Profile over score. Stop just focusing on the score, but get that profile in shape. Be healthy. When you walk in, you want to walk out with the loan. So now once you get that loan, all right, what do you do with it? So down the interest rates, because of this inflationary period that we're in, the Fed keeps raising the interest rates over here. And now we're at 6% on these loans. Let me go through in the last few minutes that we have with you this morning. I'm going to show you how you can navigate even a 6% mortgage and make the best of it. All right. So I need you to share the room right now. And if you want to see this example, go to ice10kvideos.com, ice10kvideos.com, and you'll be able to see it on the screen, because we're getting ready to put an amortization schedule on the screen. I got a $400,000 mortgage all queued up, ready to go at 6%. And I'm going to show you how you can beat this thing up. Credit Goddess, I mean, she broke it all the way down, how you can walk in with swag, okay, to the bank and say, listen, you can be in that position where you can say, listen, I can always get my credit. I can always get it. All right. Always approved, never denied. I tell you, if that's not a t-shirt, I've never heard one. Always approved, never denied. I love it. I love it. Now, once you go ahead, Credit Goddess.
I need to make one.
You sure do.
I sure.
Get that done, because if you don't, I will, because I'm gonna sell the heck out of it. Always approved, never denied. And once you get that loan, so once you go in there and you can walk in with confidence, and they say, yes, you're approved, but it's 6%, and you say, I don't care. I love it. I don't care what you're doing, trying to do to me. I don't subscribe to that. I don't like your methodology. I'm going to take this information that I've learned from the P.I.L.L method, and I'm going to tell you why this is so powerful. Okay. What's going on here? Because the formula is there, and we have been told how to use the formula in the most inefficient way. Okay, no matter what we're learning how to use it inefficiently. Now, I'm going to show you, because I'm autistic. When I take a look at an amortization schedule, I see different patterns. I see things you can do to help yourself. And I'm not talking about saving a couple of dollars or $2 or $3. I'm talking about cutting your interest costs by 2/3, 75% off. I'm getting ready to give you a coupon. All right. So Credit Goddess is going to show you how to walk in or even limp in and walk out with the money. Okay. And then when the bank thinks they have said, listen, we just got them. We just got them at 6% interest. We're going to make a whole lot of money. Let me show you what we're talking about. So we're going to walk out, not only walk in with swag and walk out with the money. I'm going to show you how to beat the bank at their own game. Are you ready for it, folks? If you're ready to learn how to beat the bank at their own game, I need you to put a number 9 in the comment. I need you to put a number 9 in the chat. If you're online, put it online. If you're in Clubhouse, go ahead and put it in the chat. I want to know better. I want to know more about somebody said you better copyright that. So we're going to get into that right about now. Go to ice10kvideos.com, ice10kvideos.com if you want to see what we're talking about. If you're on Clubhouse, know that we are live streaming to YouTube. We are live streaming to Facebook, Twitter, and LinkedIn. If you're in a position where you can't see this now, you'll be able to see it later and from now on. Let's get into this $400,000 mortgage at 6%. And I'm going to show you what the banks want you to see. I'm also going to show you what they don't want you to see. Even though they're making they're trying to charge all this money, I'm letting you know today, it is not necessary for you to pay it. Right now, $400,000 mortgage at 6%. The bank wants to charge you $2,398.20 a month. That's just the principal and interest. You have taxes, and insurance on top. And let me tell you a little trick to this. If you can opt out of escrow, do it. If you can opt out of escrow, do it. Meaning the bank is offering you a service where they will pay the taxes and insurance for you. They're just adding it to your payment every month. What they're doing, folks, is they're putting your money in a savings account that pays you no interest. And then they pay your taxes and insurance for you. Let me ask you, could you put your taxes and insurance money in a savings account for yourself and make interest on it? And pay the taxes and insurance yourself once a year? Can you do what? What?
You almost made me cuss. I have never heard about that.
Really?
Yes, really.
You don't have to do that. In fact, I can show you how to leverage that money so that you can save interest.
Lord have mercy.
While it's waiting in the bank to pay taxes and insurance, I can show you how to use that money effectively to save yourself on interest. Can we talk about it today?
So Don, you're saying pay your own insurance to whatever company you use, State Farm, Allstate, whatever.
Yep.
Pay your own insurance every year.
Yep.
And then send your money in yourself for your taxes.
Yep. You can put it in. Listen, all they're doing is putting it in a bank account. And so they say it's a service, a free service. What they're doing, folks, is every dollar the bank has on deposit, they can lend out 10. For every dollar they have on deposit, they can lend out 10. So if they have your escrow money sitting in the bank, those are monies that are deposited. That makes their balance sheet look better. They can lend out more money. Okay? That's why they do it. That's why they do it. And they're making money on your money. You're not making a dime. So you just get used to making, I'm making my taxes and insurance. You can put that money in your own account, making a higher interest rate, and then pay your own taxes and insurance every year. You can do it yourself. So let's think about it. Let's show you some of the tips and tricks here. So let's take a look at this $400,000 mortgage at 6%. And we're looking at just the principal and interest payment because this particular client says, you know what? I'm going to put my own money away for my taxes and insurance. Okay. So now let's take a look at what the bank wants you to see. What they want you to see is the $400,000 that you borrowed. They want you to see the 30-year term. and get acclimated to a 30-year term. You know, a 30-year term is just a suggestion. You don't have to keep the loan 30 years. You don't have to keep it 30 years. If you're online, folks, I need you to share this out right now. If you're online, if you're on Twitter, if you're on Facebook, if you're on LinkedIn, if you're on YouTube, go ahead and share this video out right now. Get as many people in here as possible. I need you to, we're at 15 shares on Clubhouse. I need to get it up to at least 20. I need to get this information out here. Number one, you don't have to pay escrow. You could do that yourself. Number two, the bank wants you to take a look at a 30-year loan and get acclimated and used to that idea where you're just making your monthly payments for 30 years. Do you know what that's called, folks? Do you know what it's called when you pay your mortgage for 30 years? It's called renting the money. Oh my goodness. You go from renting your house to renting money your entire life. Does anybody here want to keep renting their money? Is that why you're trying to buy a house? And folks, listen to this. While you're buying the house, you're not owning the house. You're not a homeowner until it's paid off. 9 out of 10 people you know will never pay off a mortgage and actually own a house. They'll rent the money, but they won't own the house. So you want to get the deed. You want to burn the mortgage. If you want to burn a mortgage, oh my goodness, start a fire. Let's start a forest fire of burning mortgages right here, right now. I'm going to show you some of the things that they want you to look at, but you don't need to pay attention to. So if I'm going to borrow $400,000 at 6%, I want you to see the total amount of interest paid. And I'm going to say it slow. Just the interest that they want you to pay is $463,352 interest on a $400,000 loan. So your true cost on that house is not $400,000. Your true cost on that house, if you keep this loan for 30 years, is $863,352. That's the true cost on this house if you keep the loan for 30 years. But guess what? You don't have to keep the loan for 30 years. I'm going to show you something that you don't need to know, that the bank doesn't want you to know. The annual interest rate is 6%, but look, I need you to see the total interest paid as a percentage of principal, 115.838%. Soak that in. 6% becomes 115% when you keep the loan for 30 years. Let me show you some of these things right now. Right now, we're looking at payment number one, and I need you to learn how to read an amortization schedule. I got you for the next 16 minutes. And in this 16 minutes, we're going to learn how to read an amortization schedule. And because you need, and this was something else we need to put on a t-shirt if I could find a way to say this succinctly, but interest payments you skip don't matter. Interest payments you skip don't matter because they want to charge you rent every single month you have this loan, but interest payments you skip don't matter. I need you to take a look at the interest on this loan right now. Every month, it starts out at $2,000 for the very first month. $2,000 interest. Your payment is $2,398.20. And $2,000 of it is rent on the money. You weren't paying that much rent when you were renting the house, but they want you to pay $2,000 rent on the money. Let's stop that madness. Okay, so as we take a look at, I need you to take a look at the interest payments all the way down. It goes from $2,000 down to $1,998. The next month is $1,996. The next month is $1,994, and it just keeps on going. $1,900 payments for an entire year. You know, when you add up all the interest for 1 year, it is $23,868.38. That's $23,000 of your hard-earned dollars. going up in smoke just so you can pay your loan down by $4,912.02. At the end of 1 year, that's how much you've taken off the loan, $4,912.02. But the bank wants you, for the privilege of borrowing their money, wants you to pay them $23,866.38 just to get $4,900 of equity. Folks, that is way, way too much money to pay for what you're getting. And this is what they don't want you to see. Here's what I want you to see. I want you to see this right now, that you don't have to pay all of that. I'm going to teach you in just a couple of minutes here how to read this thing and how we can engage in what's called interest cancellation. Interest cancellation. If you want to know more about interest cancellation, if you want to know how to read this thing, I need to see some number 9s in the chat. I need to see how many people are interested in learning how to read this thing and to learn how to save money at the same rate they're charging you. Learn how to save money at the same rate they're charging you. Put a number 9 in the chat and I'll teach you how to read an amortization schedule. Okay. Now, once you learn how to read an amortization schedule on Sunday, we're going to come back here on Sunday. Okay. On Sunday, we're going to show you how our opportunity cost calculator, how we take interest cancellation, put it into a computer and optimize your interest savings. We go from just regular interest cancellation to optimized interest cancellation. And we're going to get into that on Sunday. And you want to be right back here on Sunday when we get into that. So here's what we're going to look at, folks. Let's look at payment number 1. We're saying it's in January. We make January's mortgage payment of $2,398.20. $2,000 goes to interest. $398.20 is deducted from our $400,000 loan. And the principal balance is $399,601.80. Okay, you walked in with swag. You said, listen, always approved, never denied. I got my money. All right. And the bank wants me to pay them rent on that money, and I'm not going to pay them. So here's what we're going to do. We're going to make that payment in January, and I need you to take a look at February's principal payment here. February's principal payment. Okay. If there's anybody in a clubhouse right now that wants to come up and ask some questions about this, or say, just go along with me on this and help me out, feel free, especially if you're looking at it online. So we're going to look at February's principal payment of $400.19. Now we're in January. But I can see February's principal payment. And the question is, now, this is not how the P.I.L.L method works. I'm just right now sharing with you how to read an amortization schedule and how not to pay the interest. Okay. So we're looking at February's principal payment of $400.19. Do I have to wait till February to give the bank that $400? I may have that in the bank. I may have that as some of the money, and I can show you how you can leverage even the money you're putting away for your escrow account, your own private escrow, your own private money that you're putting away to pay your taxes and insurance. I can show you how to leverage that. Okay. So we've got $400 here. We got $400 and the bank wants that next month. Can I pay that to them this month if I had it? Could I give them the $400.19 early? If I did, that's called a principal prepayment. All of that money goes to principal. All $400.19 goes to principal, and I'm paid down to line 2 on the amortization schedule, where I owe $399,201.61 in January. So the bank has to use that number, the $399,201.61, to figure out my interest payment for the next month, for February. So now they have to use this number. So now I have to look at line 3. If I'm paid all the way down to line 2 already, my February payment is on line 3 of this amortization schedule. And I want to make this ultimately an and extremely clear. We just eliminated line 2, one line from a 360-month amortization schedule, a 360-month payment schedule. You just got rid of one of the months for only $400.19 and not the $2,398.20 they were looking for. Line 2 is gone for $400.19. And your next mortgage payment is on line 3 for February. What do you all think of that? And what happened to the $1,998 and a penny? What happened to that on line 2? On line 2, the bank was looking to get $1,998 and a penny, but you gave them the $400 early. Do you realize you skipped over that? Interest payments you skip, what? Don't matter. You just eliminated that. You never have to pay that now. Your total interest amount that the bank was looking for has been reduced by nearly $2,000 for giving them the $400 early. Oh my goodness. Oh, I got 17 people on here. How many people I got? I got 35 people on Clubhouse. I got 17 people looking at this online. And I need you to see something else. What if we make our mortgage payment here? I need you to see something, because we have some people who have some money in the bank. Okay. Just a little bit, maybe just a little bit. And what if we wanted to, we make our mortgage payment and then we take the $400 on line 2, the $402 on line 3, and the $404 on line 4. Folks, that's a little over, that's what, $1,206. $1,206. If I prepay that, if I make my regular mortgage payment and I take $1,200 out of the bank and apply it to this mortgage in 1 month, it saves me nearly $6,000 in interest. And my next mortgage payment is on line 5. Line 5. I just knocked out 3 mortgage payments I never have to make for just $1,200. Listen, folks, I need you to get this. Get this. For $1,200, you knock out 3 payments, but my actual mortgage payment is $2,398 a month. If I do it the bank's way, it's going to take me 4 months to do it. And the 4 months that I do it in, that they want me to do it, I will pay this loan down by $1,600, and I will already paid them $7,988.02 in interest in just the first 4 months. Or I can find a way to give them $1,200 early and save about $6,000. I can save almost $6,000. In fact, here's how much I will actually save if I do that early. $5,994.02. Interest I never have to pay. Folks, if that's not powerful, I don't know what is. And in the last 6 minutes here, you need to take a look at this. Okay? If I'm in this loan for 1 year, okay? I will pay this loan down by $4,912.02. You know, we spent time in helping you to level up your credit score and get it healthy. All right. Now we're going to make your financial literacy even more healthy and learn how to borrow money at a discount. I need you to see that by paying this loan down by in 12 months, you'll pay it down by $4,912.02. But the bank wants from you $23,866.38 in just the first year. So here's my question. Do you have to pay the $4,912 that you're eventually going to give the bank? Do you have to give it to them in 12 monthly installments? Think about it. Do you have to give it to them in 12 monthly installments? Now, I'm not recommending this. I'm just saying, give you just this is just food for thought. If I prepaid that, if I got it out of the bank and gave it to the bank in month 1. Do you realize I'm paid all the way down to line 12 in just 1 month? I skip all the interest payments between line 2 and line 12. I just paid the mortgage down to the same point I would in 1 year. I did it in 1 month. I paid it down by $4,912.02. I'm already down there in just 1 month. I skipped 11 months worth of interest payments I don't have to make for a total of, here we go, $21,888.84 in interest I never have to pay. Oh my goodness. And folks, by the time we're through with this, the bank wants $463,000 in interest. $463,000 in interest they want on this loan. What if you can walk in? Okay, all right, here we go. We're getting ready to get excited here. Okay, what if we can walk in and say, we don't want to give you $463,352. We don't want to give you that. We don't want to give you that. What if you could know ahead of time? What if you could know ahead of time that you can pay less than $150,000 in interest to do the exact same thing, to own this house, not for giving the bank $463,000, but what if you could give them less than $150,000 instead, without changing your budget and without sacrificing lifestyle? You can live well and do this. If we disrupt the bank's timing, it makes it impossible for them to charge you interest. Oh my goodness. Oh my goodness. Listen, we want to make sure that you're doing the right thing for yourself. Okay. I want to thank you all for coming in here today. I want you to know that you can, not only can you walk into the bank in this inflationary time with a healthy credit profile, walk in there with swag, and you can just have it in your mind over and over and over again. Always approved, never denied. Always approved, never denied. And now you're going to walk out. I'm going to be a home owner, not just a home buyer. I'm going to pay this loan off. I know you want me to stay in it for 30 years, but we're going to be in there for just 7 years. If you want to know the month, day, and year you could be debt free, the month, day, and year you could be debt free, I need you right now to go to ice10k.com, the link above your heads. Click that link. You can know the month, day, and year you will be debt free and how much interest you could save. Also, you need to get the book. Start teaching your children these concepts. The reason why we're stuck where we are is because we've had 20, 30, 40, 50, 60 years worth of indoctrination doing it the bank's way. Let's get this information over to our children so they are not renters of money their entire life. I want to thank you for being here today. We're going to end with Dr. Eric Thomas, but please get the book. Go ahead, and I want you to follow the moderators and thank them profusely. Coffee Brown, can you give us, is it possible for you to give us a 30-second outro? Credit Goddess, are you available for a quick outro? If you guys are available, could you flash your mics, please? Because I know you probably are overrun with with people wanting to talk to you. All right, Credit Goddess, go ahead and do your 30-second outro, and we're going to finish things up here today.
Hey, okay. Hey, everyone. My name is Rosalora Lewis, also known as Credit Goddess, all things credit and the official credit expert for the P.I.L.L Method crew here. I enjoyed you guys. I enjoyed the conversations that we had and educating you. That's my passion. So thank you guys for allowing me to share that with you. if any of you guys are interested in my services, whether it's done for you, do it yourself, definitely tap in with me. I don't want credit to hold you guys back into the lifestyle that you want to create, whether it's personally, whether it's in your business. Credit is the key to unlocking access to other people's money, right? You have to build that credibility. You have to build that reputation, that credit profile. We talked about that, right? So if you need the coaching, definitely tap in with me. Send your name and email address to the number in my bio, 888-557-5778. A link will be presented to you. Click on it. It's the link to my calendar. The free consultation will pretty much tell you how my services work. I won't have time to go over your credit profile in those minutes. But if you want me to have a little bit more time to look at your credit profile, choose the personal credit analysis. That gives you a breakdown, and that allows me to talk about your credit profile and what it is that you need to do. If you want to do this yourself, you want to protect your information, I understand. Definitely tap into that. I will tell you what it is that you need to do, and you'll be empowered to do it on your own. But if you want to hire me for services, we will be able to talk about what needs to be improved, what I will be working on, and what I will be coaching you on. It is a partnership. So if you're ready for that partnership, definitely tap in with me. Business credit as well for those entrepreneurs and business owners that's looking to establish credit so that way they can separate their personal from their business. That's a strategy as well. That's a setup as well. And you need coaching. So definitely tap in with me for those that are looking to tap into banks, credit, lines of credit, loans, get $300,000, $500,000 under your business. You know, if we can show that revenue, if we can show that business credit and your personal credit, you can get access to those type of funding. It's just that your business credit profile needs to be created, just like what we talked about on the personal side. So definitely tap in with me. Thank you so much, Don, for having me and allowing me to speak for that hour.
Oh my goodness.
On credit.
You did a wonderful job today. Thank you so much. Folks, we're looking at, we got Queen Red One. She says she was sorry she missed it today. But Queen Red One, as soon as we're done, that video is going to be ready to replay. You can replay it almost immediately as soon as we're done here. We're going to be back here, folks, on Sunday at 8:30 a.m. Central. That is 9:30 a.m. Eastern Time, 8:30 a.m. Central, 9:30 a.m. Eastern. We're going to be right back here. We're going to be talking about becoming your own bank, and we're going to be talking about the Fintech, the financial technology that runs the whole P.I.L.L method system, so you can have optimized interest cancellation. We're going to go over what optimized interest cancellation means. We'll see you again Sunday. We're going to get our last word from Dr. Eric Thomas, and I'll see you guys on Sunday. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L method. I invite you to watch and listen.
Listen to me, y'all. Well, one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today.